Oh man, what a cool intro. Thanks for having us.
Hey, hey, hey. Good afternoon, good morning, everybody. S- I guess let's get started, Chris. So do you want to share the
Yes,
screen?
let me share my screen over
Yeah.
here. Ready to go.
Yeah, I was talking with Lex the other day, and I was like, we were finalizing this topic, and we decided that hey, let's talk about AI and automation, and I thought it was a great topic to discuss and provide some information with the fellow traders out there. So, little background about myself. So, I come from tech background. I have been building technology solution for trading industry for almost 7 8 years now. And Chris, I have been working with closer to that around. I met you around that time.
Mhm.
We are working from that point onward. Let you give some introduction before we get started.
Oh yeah, for sure. So I've been trading since 2009. I've been mentored by five of the market wizards, as you know, the best traders of all time. And we go live twice a day on YouTube over on the Outlier channel. So if you want to learn directly some of the lessons that we talk about every single day, I like to say that we save time, make money, and start winning with less risk every single day. But we do that twice a day, every day over on YouTube.
Awesome, awesome, awesome. So, yeah, so I wanted to have this as a discussion style rather than me just going over some slides and you talking over some slides. Let's just change this presentation in that discussion style. So, I want to ask you, Chris, like when you started your trading, what were the challenges? Especially, you have so many options, so many stocks out there. Data gets updated every day. You have brand new data every day. You have to work on your data wrangling. Market changes every day. Someday it's new tariffs. Someday things are exploding. So I want to hear your challenges at that time.
Well, I think part of it is whenever you get into the markets, there's nobody sitting on your shoulder. You're not sitting in somebody's cubicle, right? You're not sitting with a boss behind you telling you what to do. And because of that, you have unlimited opportunities to do unlimited great things every day and also make unlimited boneheaded choices all day, every day. And because of that, I think a lot of people get into a lot of trouble. For me personally, I blew up my account twice, and that super sucked, right? And then I also spent years trading a strategy that I thought would work. And I had 80+% win rates. But then again, I was losing money hand over fist. And it was because I had been taught that basically just sell calls and sell puts and collect the premium all day long. Well, that doesn't work. It's basically, as the old saying goes, it's picking up nickels in front of a steamroller. You're going to one day get steamrolled. And that happened to me. It was really frustrating. And so I wanted to look more from a objective based trading strategy. I wanted to find something that was not any sort of intuition, not any sort of guesses, hopes, and prayers, but actually working on data, right? And so Mahesh and I, we connected several years ago, and he's like, listen, we got this really cool product that actually shows you the data behind what's going on in the markets. And it's completely changed the way that I trade. In fact, in 2024, I had a 91.37% return for the year. So it definitely worked for me really well.
Yeah, and I can tell you my challenges. When we started early on, I remember the spreadsheets. I remember the pain, downloading data pretty much every day, cleaning up those sheets. And then you are limited with the scope. Okay, yeah, I can only analyze five stocks. So I have these like five favorites. And then I was limited with the opportunities that I can choose from, right? And then you have to consider these ever changing market conditions, like, oh, suddenly something happening with Fed, or something happening with external, like outside of the US, things like that. So I was like, it was so painful. And at that point of time, I was like, man, we need to switch to automation.
Yeah.
And we actually went ahead and tackled that at the early stage of building Outlier. And actually now I'm super glad that we have pretty much automated everything, right from data download to data cleanup. to building models, things like that. Now I can look at, at a broader stocks and ETFs like every day. Within minutes, I can decide what is working and what's not.
Oh
So
yeah, and also knowing when to be aggressive in the market, when to put risk on, or when to
yeah,
step back. Like the last few weeks have been just like catastrophic to so many people's portfolios because they had no idea that they actually can take a step back and hold cash, right? And that's something we preach all the time at Outlier. We give the sell signals because we say, hey, listen, now is not the time to be putting your money at risk when all this chaos is going on.
exactly. Let's move on to the next slide. This is again, the same thing I covered just now, that I was tired of, those daily manual things. So we decided we're going to automate everything. Took us years actually to build a full end-to-end pipeline. Um, but now I'm super glad that that actually we worked on this. Let's move on to the next one. I think it's already we covered.
Well, one thing before we go on,
Mhm.
I saw that listed on here, building automated screeners. So one thing that's been really cool working with
Mhm.
Mahesh is that I had my processes that I was looking for, and Mahesh actually listened to me, and he's like, "Okay, let me figure out a way to automate what you're doing." And so Mahesh went through, and so he's finding moving averages, he's finding data points, he's finding things that I'm looking for as a database trader, and I'm not making any sort of guesses, and we're putting all that in one place with the screeners, and that's helped me tremendously, and not only helped me but improved the speed of trading, right? Because you can get into a trade just accidentally and make money, right? You can buy anything on any day. In fact, if you
Mhm.
bought the market maybe 10 minutes ago and then it just jumped higher like this, hey, you would feel like a genius, right? But we're not here trying to find those accidental wins, right? We're trying to find sustainable processes, and a lot of what he's showing on this slide is exactly what we're talking about.
And one thing I want to add, Chris, to that, one of the cool thing that we do, like literally every day, is we have this little R&D department, right? We are always testing, building new stuff. It's like our little lab, that we call it, and we have built some of the unique models, data point that's not available anywhere else. One is, as I mentioned here, fear and greed heat map. Like literally, the model outputs when investors are too fearful and greedy, and you can not only see that changing day to day, but also see when that momentum is shifting, when
Hmm.
kind of it starts to change direction. And this actually, I would say that some of the unique things that we have done, and I'm really really proud of it, because it is the data that's, not available anywhere else, that we have built, in addition to what you said. Because I think technicals are great, because, and again, automating those, some of those things, through our charting software, through our, other automated solution. I think it's a good step in that direction. So
And to piggyback on Mahesh's point about the fear and greed, that's one of my key entry and exit signals. And so our platform actually shows fear and greed not just on the market, not just on the sectors, but also on every single stock that we cover. And whenever I'm looking at this, I want to see, like, if I'm buying a stock, I want to no longer see any sort of fear coming into it. I want to be seeing it getting greedier and greedier and greedier. In fact, there's this old Wall Street Journal cartoon where it's a whole bunch of traders, and one says, did somebody say buy? And then everybody starts screaming buy. And then did somebody say sell? And everybody starts screaming sell, right? And if you think about it, that's how the market works. The market works because so many people get behind just one person starting to take a risk and starting to stop being fearful and start being greedy, right? Once everybody's bought the stock, what's left? There's only sellers that are left, and we're trying to measure that through Outlier, and that's what's really cool. So for me, I'm looking for the signals whenever the fear and greed bottoms and starts moving up and starts showing more greed, and then if I'm already in the trade, fear and greed can only go so far, right? So if I'm getting into a trade and the greed is already at 70 or 80 out of 100, I'm not giving it very much room to run because I don't know just how quickly it's going to snap back. So for me, I'm looking at it like, I might only give it 5, maybe 10 or greed points, and then I'm going to get out. I'm going to take my profits before it starts to snap back. So I
and I'm
find go ahead, Mahesh.
And I'm assuming that you have automated some of these things, right?
Right.
On your side to save time literally every day. And since I know this, that you have taken some of these data points and added on top of your other criteria, right? Entry exit criteria, and you have literally you have automated this system that saves you hours and hours of analysis every day, right?
Oh yeah,
Right.
big time.
So I think that's phenomenal. I think that's a great and smart thing to do. You know, let's move on to the next one. So just how we do it, like many people like have asked in past, like, hey, uh, like what is needed, like what are the different places where you need to automate, because this is very crucial, because uh, first stage is, as you can see here, is like the data is one of the key things. Like at Outlier, we collect data from different vendors. We have some of the data that we scrape from the internet, and then we have built these algorithms to clean up the data. I mean, that sounds like a trivial matter, but actually that's so important, because sometimes there are some fields which are missing. How do you, like for example, we have multiple data vendors, right? Sometimes we get data, oh, there's closing price missing from last 2 days. Now, if I don't have that price, how do I add that price? So we have like 2 3 data vendors, and make sure that we are addressing those kind of errors. So automation play a very key role in that first stage, like data download, data pre-processing, things like that. And after that, once it goes from uh, you know to that stage, we clean it up. We have automated error handling solutions built in, which I think it's phenomenal, because it took us many years actually to perfect these things, but it really helps with streamlining everything. And the next stage, as you can see, is like these are some of our core processes that I'm sharing. Now you can run your algorithm, like we have some classification algorithms that we run, like grouping some of this data into certain buckets, and then how do you interpret some of that data. So that's where AI kind of plays a major role, because now um, I was talking with someone and they were like, "Hey, yeah, uh, you can build an AI where you can apply AI and it will give me when to get in, when to get out." But it's not that simple. I mean, there's no model like I can just throw in. I need to make sure that data is in correct format, before I can feed it to my model. So that process needs some work, which is huge. Then you can't just apply an AI to everything without any goal, without any, hey, uh, AI is not that smart right now that I can tell, hey, can you do this thing? Maybe in LLMs, maybe in document processing, it is getting smarter, but in other numerical values, it's still not there yet. So we have to work with, we have to apply AI on these pieces. Like we have classification algorithm, then we have algorithms that do some interpretations, and then we have some algorithms that build these model to generate those fear and greed values daily. We have models that kind of predict which way the price is moving on stock level, on sector level, where the overall market is moving. Think about it. Now I have all the visibility. I can run all these analysis. I can build all these models just because I have all of this visibility. And that actually helps us to innovate, to basically come up with new ideas. Hey, we are using this data, right? This way, how we can improve. And I'll let you, Chris, share this example about market breadth, right?
Oh yeah.
So how we came up with that, I'll let you share that story.
Oh, this is such a great story. So Mahesh and I have been working together for years, like I say. And at one point, I was using the outlier signals. I believe this was mid 23. And I was making money. I was doing my thing. And then everything stopped working. And I was like, what's going on here? And so I remember specifically looking at the fear and greed list. So every single day we have a not the fear and greed list, the bull and bear list. Every single day on the bull list we have our buy signals, and on our bear list we have our sell signals. And some days we can see as many as I literally saw one day with 700 sell signals in a single day. It was like everything shifted all at once. But back to the story here. I remember going through and noticing day after day, I was putting on these trades that just weren't working out for me. And I was like, what's going on here? And I looked, and just a casual observation, and noticed that the number of stocks on our bull list was going down, right? So let's say if it were 1,500, then the next day it was 1,400, the next day it was 1,300. And I was like, is there something to this here, right? If there's less buy signals coming through and more sell signals coming through, does that mean that the buy and sell signals maybe should be changing here? Maybe we should be looking at some different sort of strategy to take this into account. And so Mahesh sent me the data, and what I found was this extreme correlation for when the number of buy signals are coming through, the accuracy of the buy signals gets stronger and stronger. And that makes sense because, like I mentioned, that old Wall Street Journal cartoon, if more and more stocks are screaming buy, then more and more opportunities are going to start working together because a rising tide lifts all ships. However, on the other side, if more and more are starting to scream sell, and you're the only guy buying, you're the one stock that still has a buy signal, you may be running out of time, maybe running out of luck. In fact, Mahesh, if it's all right, let me demo that
Yeah, please.
market breadth over here inside of Outlier. We'll go to market breadth right here. And this is what we're talking about. This market breadth is very cyclical. It's the number of stocks that we show having buy signals in a single day. And you can see less and less during this period, and then it changes and comes up and more during this period. And this was an indicator that I helped develop, which I'm really proud of, because it really shows me like overbought areas, right? This time around November 2023. And then immediately it had oversold areas. And it really shows you, looking at this, just how quickly it can reverse. Now, to take that one step further, you can throw an EMA, an exponential moving average, which I'm sure most of y'all are aware of. And you can actually see these crossover points. So you can say something, oh, look, the market, actually, we're getting more and more buy signals, but, oh, wait, we had this crossover right here. So now I'm looking for maybe taking some profits, maybe starting to look for shorting opportunities. Less likely that my long signals will start to win, and more likely that it's time to get out of the market. And then just a couple of weeks later, it starts building back up. And so the cyclical nature of the market breadth has been really instrumental to me. I found incredible opportunities just by being able to be on the right side of not only the trend of the market, but also the breadth of the market. Are more stocks helping push the market up, or is it getting weaker? And I like to think of market breadth as this. Imagine the market itself. The S&P 500 is the general. And if the general is moving north, but more and more of his soldiers are starting to turn around and go south, at some point, the general is going to have to turn around and retreat as well. And so that's the way that the S&P relates to the market breadth right there, is we need the soldiers to back us up if the market's going to go higher. So looking at the market in isolation, because it's a market cap weighted index, can somewhat skew what's actually going on under the hood. And by having the breadth right there, you can see right under the hood right there.
So that means, so this is again a great example of how do you leverage the data, right? So we had data which we were not using, and we found another cool application which actually helped us in determining the which way market is moving. So not only at the market level, right, but also on the sector level. Like you can look at this data at the sector level.
Mm-hmm.
And I want to share this example that especially the recent events, right? A few weeks ago when the Liberation Day came, right? A few days ago, and before that, how our market breadth was looking, right? If you don't mind sharing
Oh,
that
for sure.
as
Yeah,
well. And because I want to show everybody the power of the data here, and actually our members. So we have like thousands of traders who use our platform. And Chris, if you don't mind sharing some of their experiences. You know, uh,
Oh, dude.
how did
So
they?
in our Discord, we actually have a whole channel built on share your big wins.
Yeah.
And I mean, it just goes on and on and on and on of everybody
What
who
is the
uses
common
Outlier.
theme? What is that common theme that people are? Oh, I'm glad that I'm in cash right now.
Oh my
Okay.
gosh, yeah. Over and over, people are talking about how they're new to investing, and something about becoming wealthy is being patient in the market. And so many people really just have forgotten what patience is, and they get suckered into, oh, I have to be buying something today, right? If I have money in my account, I need to be buying something. And I remember going through that exact stage as well. In fact, funny story of mine, I remember going on a business trip and I landed in Arizona, I believe, and I pulled out my iPad and I was like, well, I don't have any trades on. Let me just load up, right? And so I had no basis in this. It was purely based on I had money to blow. So I was like, I'm going to buy some of this. I'm going to buy some of this. I'm going to buy some of this. And then a week later, of course, everything was losing. I had no idea what I was doing at the time. I had no structure, no plan at all whatsoever. And having data eliminates you from having to make those boneheaded decisions, right? Everybody has the opportunity to do anything in the market every single day, but that doesn't mean you should. A lot of times sitting on the sidelines is great. And in fact, Liberation Day came on April 2nd, and that's when the crossover started to occur. And then look out down below, right? Look out down below, just on the market breadth. So yeah, it's
Is it
saved me, oh my gosh, unbelievable amounts of money, being able to combine not just the trend of the market, but also the breadth trends and which direction they're going.
so? Is it fair to say that having data in front of you, good data, of course, uh, in front of you, actually helped you as a trader to make better decisions?
Oh, unbelievably so. Unbelievably so. And if enough people understood how important the data is and stopped just blindly buying a stock, or maybe even following a YouTuber who says, hey, buy this stock, it's been beaten up, it can't go down any further. And then you look at the chart and you look at the data and you're like, well, I don't see any reason to buy it right now.
Yeah. By the way, that was me many years ago. I have lost. You probably lost your account a couple of times. I have done way more mistakes. I remember using based off my gut feeling. Okay, oh my friend is telling me buy this stock because it's going up, and I swear to God, the day I would buy the stock, the next day it would drop, and I will sell. I will
Mm.
panic sell because I didn't have any visibility on what I'm doing. I didn't have any plan in place. Like I come from tech background and I thought that I knew what I was doing, but when it came to stock market, it just you know kicked me, and showed me, it's doesn't matter, what's your background, but you need to follow a plan, you need to have some rules in place. And I think that was an eye-opener for us, that hey, build something database, data backed, right? And I think that's kind of a journey we have been so far with Outlier. So let's move on to the next one.
Oh, for sure.
Yes. Yeah. So this is just a generic slide I added. Same thing today, just to share, and it, that one of our key thing is making sure that when we build something, we are not just, hey, this is like a black box thing that, hey, buy signals here, sell signals here. We are actually presenting that data, why we are making this decision, data behind, our buy and sell signals. Hey, because this is happening like this, that's why you're seeing buy signals, or what data went into to build this algorithm. So I think that is like a very, very important for us, that have that transparency in place. And I think more than me, I'm very happy that our members are happy and they are seeing benefit of data, that we are seeing as well. So
And
I think.
as far as like the transparency goes,
Mhm.
we don't just make a product and then disappear. Like every day, like I said earlier, twice a day, I am looking for trades using Outlier, right? So it's not just that you buy something, it's a black box, and you don't know what's going on. It's, hey, I'm checking out Outlier. Oh, look what Chris is doing today. Oh, look how Chris is reading the data. Okay, this makes sense to me. And now Chris isn't looking at uh, Dollar General. Dollar General stock's been performing really well lately. Maybe I could go and make some money on Dollar General and take some of these lessons and understanding how to use the platform and apply it for my own trades. So, like, we never leave you out in the cold. That's the thing, right? We have literally thousands of people a day watch us use the platform.
Exactly, and that's the key. Let's try to see if we can cover rest of the slides, and maybe even show how we use Tradier platform as well, because like literally we are sharing Tradier platform every day on
Oh
our
yeah.
live streams. Yeah,
In fact, every trade that I've put on for years is inside of our Discord. Let me see if I can find it real quick. Which Outlier trading room? Every trade that I've made for years and years and years, and in fact, we do have a little bit of fun over there, right? Little guy, random guy on the internet. But every trade I've got for years and years and years is back inside of here, and we use Tradier to do so, right? And one of the things that I like to do, and in fact, I learned this from Larry Hite. So for those of you who don't know, Larry Hite was the very first billion-dollar hedge fund manager, one of the original market wizards, and one of my mentors. I had an opportunity to work with Larry. Larry Hite's about 1.5 million years old, but I had the opportunity to learn directly from him. And one of the key things that I learned from him, which was super, super cool, was buying deep in the money options. And so if we go into Tradier, I like to look around the 80 delta for my options if I'm going to go long. And on a stock like SoFi, that's an $11 stock right now, I could buy a deep in the money option for about, let's say it's about $1.75. And so by doing so, I'm controlling 100 shares of stock with my Tradier account here. By owning one contract, I'm controlling 100 shares of stock for the equivalent of $175, versus if I were to buy 100 shares of the stock at $11.50, that would be $1,150. So we're talking 85% less that you would have to pay buying the stock outright by doing the deep in the money options. Like I said, this is not something I came up with. This is something that I learned directly from one of the market wizards, and I find that to be incredibly useful. Also, I believe this is the button right here where you can send a what if. This is a really cool tool for me. I love this. So you pick your option trade and then you send it to what if inside of Tradier, and it'll actually show you the profit and loss curve right there, and show you over time, right? You can change the date as to what you're looking at here, but it'll show you what your trade setup looks like here. So you can actually get pretty exotic and then send that over to Tradier and show exactly where your profit and loss zones are. But I do like to keep it simple with just long calls and long puts. But going back to this real quick, you know, the trading psychology aspect is so important to me. I really am a huge advocate for trading psychology because I've made all the mistakes, right? I have made literally every mistake you possibly can. I tell people all the time, I've blown up my account twice. I've lost over $200,000 figuring out how not to trade. So basically all that was left was the right way to trade. And working with people like Mark Minervini, Tom Basso, Steve Burns, Larry Hite, have given me opportunities that I would never have otherwise. But the number one thing that all of them preach is using data, right? If the data is a number on the chart, if the data is a breakout in whatever pattern that you've drawn, the pattern is still based on data because it's price and time. At the end of the day, that's everything that you can even look at on a chart. And so because of that, it has helped me personally make so much better decisions. Not only am I no longer getting into a Uber at the airport and saying, I'm just going to buy whatever I can, but I'm actually looking at this and saying, okay, first, what is the reason I'm getting into this trade? Right? List out the reasons. Okay, this fits my trading plan, and it builds confidence by doing so. This is my trading plan. And then knowing where I'm going to get out. You're never going to catch the top. You're never going to catch the bottom. And in fact, the top 10% and the bottom 10% are the most expensive points on the chart because everybody else is trying to catch the top and the bottom. The money is made in the 80% in the middle, right? You can take that to the bank, right? Because if you are in a trend, if you know where you're getting in, and if you know where you're going to get out, that's what's going to separate the best from the rest. And getting out is so much more important than getting in, but nobody talks about it. It's not sexy. It's not sexy to say, oh, I'm going to sell the stock if it does this. It's only sexy if it's like, oh, I'm going to buy the stock. It's going up today. Look how exciting this is, right? But getting out is so much more critical because you'll know how much you're risking to get into the trade. And how many times have you been in this situation where This is the third point down here. How many times have you been into the situation where, you buy a stock? Let's say you buy the stock at $100, and it goes up and it goes down, and it kind of flirts around for that for a while. But you say, you know what? You have a mental loss. You're like a mental stop loss. You say, I'm gonna get her out. I don't know, $99, and the price kind of starts drifting down, and you see $99 come, and you're like, well, I mean, I can't get out today. I'll just give it another day to figure out. But I've done all of this for sure. I'll give it another day to figure itself out. And then the next day it opens around 99.15. You're like, oh, told you, no big deal. And then by the end of the day, it's at 99 again. And the trading gods have given you one last chance to follow your trading plan. You're like, nah, it'll be all right. It'll be all right. The next day, what does it do? It opens up at 97, and then it goes down the entire day, and it's down at 95. And you look at your account, and you're like, ugh, not again. It's every single time I put on a trade, I have these giant losers. But the thing is that you didn't have to. You never had to. All you had to do was follow that plan that you had in place. And I know it sucks. I know it's very difficult to acknowledge the fact that you were wrong in a trade. But the best traders in the world are right 40, 50, 60% of the time. If you think you're going to be the one lone wolf who gets it right every time, just not going to happen. Or even worse, you look at it and you're like, I'm going to double down. Well, I loved it at 100, which is why I bought 100 shares. I love it even more now that it's dropped all the way down to 90. So my average price will be 95. So I'll be to profit that much quicker, right? But then again, it's trending down. So it's already given up 10%. And you've added more. So you've now doubled your losses as it continues to trend down. And you don't have to do any of that, right? I always say that there are 4 possible outcomes in a trade: a big win, a small win, a break even, and a small loser. You never have to have big losers again. Right. The way you avoid big losers is A, knowing exactly where you're going to get out on the chart, and B, position sizing correctly. Right. If you position size like maybe 5 to 10% of your portfolio in any single trade, even if it gaps down, you're still going to be able to survive at the end of the day. But if you're going full port into a single stock and it gaps down and you're wondering, what have I done? You're not playing the game correctly. So that's just a couple lessons, right? This is what I talk about all day on my YouTube channel, on the Outlier YouTube channel, because we live stream like this every day. And we get all these questions that come through in the chat. And so this is an opportunity for me, not just to help you with your trades, but also your trading psychology. And so that you can become a profitable trader even faster.
By the way, little secret, I have done that. Like when a stock was falling in past, and the same thing happened to me, and I was like, oh yeah, this was great. This is a great company. My gut feeling is telling that they have a great product. There's a demand. I'll go through all these, analyst reports and what they're saying, news, look at the demand. And I was like, man, it's going to go up from 100. 100 is like the cheapest deal I can get. Then it'll go to 95, 90. I'll buy more, thinking the same. And then suddenly the day it reaches like 80, 85, I start to panic. Okay. And then, the next thing comes to my mind is, oh man, I'm going to lose everything.
Mm-hmm.
Let me sell it. Right. Now, another thing is, like, if I decide not to sell it, if I just suddenly change my mind from, hey, being a long-term investor, it's not a bad thing, and suddenly these feelings like this start coming to my mind. Hey, everybody say the stocks are always going to go up. Why don't I hold it forever? There's no guarantee, right? That is another mistake that can happen, because it can go from like $60 to $10. Like, take example of Bed Bath and Beyond, right?
Yeah.
A stock went up like crazy, filed for bankruptcy. Tell me that long-term investing always work. You have to have a plan, and I learned my lesson hard way by losing a lot of money. It's not just the money that I lost, it was peace of mind as well.
Mm-hmm.
I remember being irritated during those times when I was losing money. I was not enjoying times with my family. They could tell that something is wrong, and so that was I would say that was like side effect of bad trades. And I think you're right, Chris. Like, having a plan in place, taking a loss, it's not a bad thing. as
Yeah,
long as you're sticking with your plan, right?
exactly. Oh, and I have a great story about how it's not just about the money, right? I remember specifically going to Disney World, and this was during one of the times when I was ruining my account for the second time. And going to Disney World, and we're in our hotel room and looking out over the Disney Springs area, and there's this hot air balloon thing. And I remember standing at the sliding glass window, thinking to myself, "God, I did it again. I blew up my account again for the second time." And I could not be in the moment because all I needed to do while I was walking around the Disney World was look at my phone, look at my phone. How much am I losing today? How much am I losing today? How much? And you know, every day that went by was just torture. I couldn't be there with my family. I couldn't do anything except be stuck to my phone thinking what a bonehead mistake that was, which another pro tip is never trade when you're going on vacation. Just get out of your trays and enjoy it. But yeah, I have so many great stories like this because I've done all the mistakes, Mahesh. Dude, I know it. I know exactly what you're talking about.
Yeah. Okay. Let's move on. But yeah, this is probably one of the most important thing in trading,
Mhm.
psychology.
Oh yeah. And not only that, but here what I wanted to showcase was you can make things as simple as this. You can take a chart like this, and I'll give you a little perspective. I remember the first time I was working with Steve Burns, author of New Trader, Rich Trader, and all kinds of other investing books. And Steve asked me, "Okay, Chris, which direction is the stock trending?" And I looked at him and I was like, "I don't know. How do you know which direction is trending?" And of course, this is like remedial 101 uh, trading. And he's like, "Chris, just put a trend line on there. Put any trend line on there. Put a 10, put a 20, put a 200. It doesn't matter. If price is over that point, it's trending higher. If price is under that point, it's trending lower." So what I wanted to do here is show you, like, even if you're a long-term investor, you don't have to make things super complicated. Imagine you buy as it crosses over the 50 period EMA. That's our long-term EMA that I like to look at. You buy right here, and then you let it run, and you can even dollar cost average all the way up. You let it run, and then it closes under that point. And you get out. And then it might bounce up or bounce up a little bit, down a little bit, and you can make a buck or lose a buck. But you know what you'll do is you'll avoid these giant drawdowns right here. And then when it crosses back over, you can do it again. You can add some more, and then you might make a buck or lose a buck, and then you can do it again, and you might get out right here and then get back in and all the way up. And so during this whole process, you're taking advantage of the fact that the market's moving up. You are on top of this trend and you're making money. But then what's happened this year is you get to a situation like this where it warned you. It gave you warning that things were not right. And then all hell broke loose, right? All hell broke loose, and it's just been basically heading down to the Gulf of the Gulf of America, I should say. And now we're looking at this situation. We're like, "Oh man, I can't believe how much money I've lost." Or you could say, "Oh, dude, I can't believe I got out ages ago and saw it drop like a rock since then." So this is what I want to share with you: is that if you are trading, you don't need Outlier, you don't need anything else special. If you want to just keep it super simple, follow one moving average. You pick it. But the 50 period moving average is a great place to start.
Yeah, and I was chatting with one of my friend, and this discussion came up that hey, market drops or a stock drop 50%, right? 30%. You have to make way more than
Oh, yeah.
50%
Right.
to
In fact, to that point, if a stock drops from $100 to 50, that's a 50% loss. But now you need a 100% gain to get back to the 100.
and that just like imagine you are trying to save for your retirement or you have some plans. How long will it take to get back to the same place? So you lose time, you lose your patience, you lose your mental peace. Like there's
You lose
so
your
many things
hair.
you lose.
I've been losing lots of hair. I know what that's about.
So yeah, I think it's a great great thing that if you're a long-term investor, I mean, technically you don't need Outlier or any other system You just need to educate yourself with few basic things, and you can really become good at it, right? Um, so yeah, I think it's a great a piece of nugget that
Yeah. Well,
anybody
I
can
like what
have.
you said there. You don't need all these different tools. What you need is to educate yourself. At the end
Exactly.
of the day, that's what you need to do is educate yourself. Because I like to say, Mahesh, all stocks are bad, but every once in a while they act right. And I say that because all stocks are bad because they all have inherent market risk. They all have a chance to work against you. But every
Hmm.
once in a while, they're acting right and you can buy them and you can ride these incredible trends. But just because it's had this incredible trend in the past doesn't mean that getting right back in as it's crashing down is the best time to get in. I like to say buy stocks when they're crashing up, not when they're crashing down. And having something like a moving average on here will tell you if it's crashing up or down. Now, Chris, can you actually say that it's going to work? Yes, I can, because it's math, right? If the average price of the last 50 days is below the current price, mathematically speaking, price is going up. If the price is below the average price of the last 50 days, mathematically, price is going down. The trend is down. Now, trends will reverse. I'll be the first one to tell you this, that it doesn't mean that it will last forever, up or down, but you'll be on the right side of the trend. And you will never have to worry about, oh, I can't believe I bought AMD as it's been screaming down as fast as it can from 200 to 150 to 130. And then I saw this morning it was like a $70 stock.
Oh man, the
Good gravy.
hope, the hope of buying a deal, right? Oh, catching that bottom, the hey, let me catch the bottom and let me maximize my profit. I think that's where trading psychology comes in, right? That greed, the inherent greed that we probably all have,
Mhm.
right? And that lets you make those bad decisions, getting in at the wrong time when market is falling, you know not getting out at the right time when your plan is telling that, hey, get out. That greed is and I think that's kind of like so important of a data point, that we spent years of researching around that data point, because uh, I see that you have visibility of that, you can really improve a ton on some of these things.
Mhm.
So what else we have? I think there may
Do we
be.
have any other size? Let's see. Oh yeah, here we go. Keeps you in the trend during strong trends, long or short if you want to look at it that way, and it keeps you out of trouble. So yeah, that's the end of our slides right there. So we'd love to open up the floor to any questions that you all may have.
Yeah,
And
and
of course, it can be about Outlier, it can be about trend trading, it can be about trading psychology, whatever's on your mind. We'd love to help out.
Lex, I know you said that call my name and I'll be there. So this is me calling your name. Okay.
I'm coming back. I have a different viewpoint now, I think. Hold on a second. It's not good enough. There we go. You can see the SPX a little bit behind me.
Oh, I
Awesome.
bet they're cheering today, aren't they? I bet they're going nuts.
They are cheering. Their automation worked today. It's gone
I
nuts.
bet it
Oh
did.
my god. Great job, guys. And before I forget, let's talk about where they can find you. I'm assuming outlier.com, but sometimes I get that wrong because it's outlier.io or something like that. So
No,
which one
it's
is it? I'll have it.
.com.
Okay.
Yeah, outlier.com, and they can reach to us. They can send us emails, support@outlier.com, or my first name, Mahesh, @outlier.com.
Okay.
Yeah.
Perfect. And then we'll put that in the chat. And then and you have different plans for people to join up, or how does that work for you guys?
So we have an annual plan, $299. There's a deal going on per year. Um, and
And
we
to
have
that
just
point,
one
it's
plan. I mean,
64% off. I'm
yeah,
sorry, Mahesh. I was just going to jump in. It's actually 64% less to get the annual pass than the monthly
Okay.
pass over the course of a year.
Got it. Okay. That's quite a
exactly.
savings then. So let's do a couple questions while we have a couple minutes here. Have you found vital items, or I guess maybe data points is a better word, that are crucial when using automation or AI or any sort of data set? I know you talk about trends and that sort of thing. Anything else that comes to mind that's pretty critical? to be, on the success side of the equation more than not? That
Chris, you want to take that first, and then I can.
So for data points, I mean that's more Mahesh's wheelhouse. I just do the trading and the YouTubing, and then Mahesh does all the data. But I mean, honestly, the key data points that I like to look at are the fear and greed heat map, and everybody's familiar with the CNN fear and greed heat map, right? Now imagine having that on absolute precision level on every single stock, on every single sector, and then you can see, hey, is the stock that I'm buying, are people getting more greedy and it's going up in value and more investors are flocking to it, or has that peaked? Has the greed peaked and now it's starting to come back down? And it may still have a overall greed value, but you can see it starting to wane and that change before the price is reflected in this.
Yeah, and as Chris mentioned, fear and greed heat maps are so important because we have built it at the stock, index, and sector level. So you have like pinpoint visibility on each and every sector, stock, ETF. So that's kind of like the one of the most important data point. By next week, we have a new data point that's coming out. We are calling it outlier blocks. Essentially, think about these as these in a simple manner support and resistance level, but where there is lot of interest, lot of order blocks are sitting. Let's say a price is falling down, but if you see there's an order block that's sitting there, it might bounce back from that because orders are getting filled. And then there is a like top level order block, which we call it bearish order block. If there's a trend going up, if suddenly it hit that order block, there's a chance that it may bounce back from that point toward downward. So this new data point that we are introducing, it will help people be aware of controlling their risk or greed, that stock is running, it's going to go to the moon, like but hey, there's like a big order block sitting there, be careful, it may turn around. So
Yeah, and
that's
those
data
order
point.
blocks. Sorry, Mahesh. I was just going to say those order blocks are one of my favorite things to see, right? Because you'll be popping around on different charts and you see one bearish order block or one bullish order block, and you're like, wait a minute, look at how it bounced right at that level. That is crazy. I love pointing those out. And I always like to tell our chat, tell me they don't work. Just go ahead and tell me they don't work, because I can show you on this chart all the times they did. So that is so cool to me, seeing those support and resistance areas. And then knowing when to get into a trade as it's running up into that resistance area. It may not be the right time, but that could be a great strategy for you to say, okay, once it hits this area and reverses, that could be a solid entry. So you can use them in a variety of different ways.
Okay, good. Yeah, I like, look at it. I'm a big preacher of trade idea generation for the retail people. I come from a world, the market making community that didn't need that. We had our own built-in edge in bids and offers. The retail world gives that edge up, and they need an edge solution. And to me, just listening to all the folks today, all the AI and data analysis, it gives a retail person a great edge in the marketplace because they can't generally get it between the bid offer. Now, some markets are super tight, which is awesome, and it's a pick 'em, which is good. So that helps them. But having this idea generator that is backed by data, I love it. I think you guys are doing some great things here with this. So
thank you.
Very, great work. One last question, we got to go. So I just looked at the time. Sorry. Any best time frames for the kind of things you set up, option wise? I'm assuming it's not quite 0 DT, and it's probably not a leap, somewhere in between. Anything jump out real quick?
So our average days in trade.
Frame?
Our average days in trade is roughly around 19 days, I believe. So for me, when I look to put on a trade, I'm generally starting at the 21 days to expiration contract, and then I might add or subtract a week based on liquidity. But generally, that's my wheelhouse where I go to. Other people, they look more longer term, and other people look a little bit more shorter term. But as far as like the duration of the trades, that's generally the wheelhouse that we're looking at.
Perfect. Okay. Great, guys. Great job. We're going to have to get on to the next one. But thanks for coming on. Appreciate it. And look forward to some more collaboration with you guys. Great work.
All right. Looking forward.
Thanks for having us.
Thanks, guys. You bet. Thank you.